Thank you for joining us on Savvy Senior Sources, Talking with Experts. Let's take a moment and hear from our sponsors, GWG Life and Reverse Mortgages SIDAC.
Provide for your long-term care. Convert your life insurance towards payments for long-term care. If you are concerned about future health care, you can convert your life insurance to pay for home care or assisted living. Health problems can be stressful enough without the added burden of financial obligations. If you feel that you no longer need your life insurance policy, you may want to apply the value towards long-term care.
Hi, I'm Beth Paterson, a certified reverse mortgage professional with Reverse Mortgages SIDAC. Mike and Carol decided that they needed a one-level home to fit their changing health needs. They used the reverse mortgage to purchase their new home instead of using conventional financing. This has benefited them greatly. Barbara decided to do a reverse mortgage to pay off her conventional loan that she was making monthly payments on. She had funds left in the line of credit after paying that off. And a year or so later, when she fell and broke her shoulder, she was able to tap those lines of credit to pay for her home care. As she said, she would have been up the creek without a paddle without the reverse mortgage. If you'd like information on how to receive security, independence, dignity, and control in your retirement years, contact us. Hi, welcome to today's episode of Savvy Senior Sources Talking with Experts. Savvy Senior Sources guide your way through resources A to V for seniors, boomers, caregivers, and their advisors. In addition to the shows, we also publish a resource guide, the Savvy Senior Sources Guide, and I want to encourage you to visit savvyseniorsources.com to get information on resources and how to get a copy of the guide. I'd like to take a moment and say thank you to our sponsors, GWG Life and Reverse Mortgages SIDAC, for making the show possible. And now let's welcome my co-host, Deb Nygaard from Arthur's Residential Care. Glad to have you back with us again today.
Thank you very much. Glad to be here.
Good. And again, we have our repeat guest of Professor W.Johnson, an associate professor of finance.
That's correct.
And we're glad to have you back talking about reverse mortgages.
Seems like I was just here.
I know. We have so much to cover on the topic that we decided to bring you back and do a second show on it. Or a part 2 show.
Glad to be here.
Glad to have you here. Tell us again a little bit about yourself.
I have a PhD in finance from the University of Tennessee. Taught at a number of different universities. I'm headed to Maryville University in St. Louis in about 6 weeks. Just took a new job there. I've worked in the reverse mortgage industry for about 5 years, which I think gives me a slight advantage over some of the other academics doing research on reverse mortgages. I like to think so anyway.
Yeah, there you go. You have it from both sides and understand it maybe from as an originator versus just doing the study.
Yep, that's
on
correct.
It. But you're not originating now.
Nope.
But
when I was originating, I was getting frustrated with all the misinformation, and I actually wrote articles in local newspapers, that sort of thing. And at that point, they were actually doing a little bit of academic research, but not much. And everything that had come out back then was really incorrect. So I thought, wow, that's not helping out at all. And that's part of the reason I got back into academics. I want to set the record straight.
Well, we appreciate that. I am a certified reverse mortgage professional and do originate actively now. And there is so many misinformation out there and people don't carry it far enough. And yes, there's the commercials there, but as with any product, you cannot get an understanding of the topic at hand or the product in a 30-second, 60-second commercial. So
it does seem to me like people are suspicious, and I don't know why. I think there's still myths out there, and I'm wondering if you can touch on
There are lots of myths out there, and unfortunately they keep getting just same things come up over and over again, whether it's in a news show, magazine, whatever. But yeah, lots of myths. People think that if they do a reverse mortgage, the bank owns their home, which is untrue. It's no different than a forward mortgage. You still retain title and are able to do all the things you would normally do.
And I just want to say, in our industry, we call conventional mortgages forward mortgages. So it may be a new term to people, and they're going, what is a forward mortgage? Conventional mortgage.
So that's probably one of the primary myths. There are so many out there.
Yeah. Well, another one is closing costs are high. We hear that a lot.
Absolutely. And unfortunately, this has probably been perpetuated in the popular media more than anywhere else. I've seen stories where they're talking about closing costs being in the thousands of dollars, like $15,000, $20,000. And in reality, a reverse mortgage closing costs are very comparable to a traditional mortgage.
And I did a comparison, and it's available on my blog. And the difference is the FHA mortgage insurance premium and about $300.
Exactly.
Or it could be partly FHA, but reverse mortgage borrowers go through a counseling by a third party, and the counselors can charge $125, some $150. But so $300 between the counseling or FHA mortgage insurance premium, they're comparable.
Absolutely. I just did a traditional or forward mortgage a couple years ago when I bought a house, and the costs were almost identical. Very, very little difference whatsoever. So that's a big misunderstanding. A lot of people think that if they do a reverse mortgage when they move out of the house or pass, that they no longer own the house. They think they cannot leave it to their heirs. That's not true either.
The loan, just like in a conventional loan, the loan balance has to be paid back. It is a loan, it's a mortgage.
Here's the difference, though, that people generally don't think about. Let's suppose you have a mortgage, a forward mortgage, and you pass away, you leave your house to your kids. Until they settle your estate, they have to make that mortgage payment. The bank's not going to say, that's okay, don't worry about it till you settle your estate, which could take several months. If you have a reverse mortgage, there is no monthly payment, so kind of a benefit to the heirs until the estate is settled. So that's kind of a difference I don't think people think of very often. But you can leave it to your kids.
Non-recourse.
Non-recourse, absolutely. So big difference again. If I lived in Las Vegas for a number of years, and housing crisis had a big impact on home values. So there were a lot of people who were upside down. They owed more on their home than the home was worth. If they had a traditional mortgage and they passed, unless they could work out a deal with the bank wants full repayment. With a reverse mortgage, it's non-recourse, so the most that could ever be owed is what the value of the home is. So nobody is ever going to have to pull a single dime out of their pocket, whether it's the borrowers themselves if they choose to sell, or the heirs if they inherit the house. So that's a pretty huge benefit also.
The other thing we often hear is that reverse mortgages are bad. And my neighbor said that they're bad, nobody should do them. And I always ask, well, what have you heard is bad about them? And so far, nobody's been able to tell me that they're bad. And I had a woman who called me. She was in tax foreclosure. She had not paid her property taxes. She did not have a mortgage on her home. And so she had a $300,000 home, owed $20,000 on her property taxes. They were about to foreclose on her. The county actually told her to explore a reverse mortgage. Well, her brother told her, no, reverse mortgages are bad, better not do it. And I offered to come visit and meet with the brother. Nope, he won't meet with you, he just says they're bad. She did not do the reverse mortgage. She lost her home and the $280,000 of equity that was in it beyond the property taxes.
And that's a story that happens quite frequently, but never gets told in the news.
Right.
Which is so unfortunate. If people would just become educated and learn the facts, not what they read in the popular press all the time, but learn the facts about a reverse mortgage, then we can eliminate a lot of those situations. You know, I'm very passionate about reverse mortgages, and I guess I'm a little bit biased. Well, I'm a little bit biased because I did one for my parents. At the time, my dad was, he had terminal cancer, and he had a pretty short window, and he wanted to make sure my mom was taken care of. So we explored opportunities. This turned out obviously to be the best one. They had a mortgage at the time, and he lived much, much longer than he was supposed to. And I think part of that is he was just more relaxed. He knew my mom would be taken care of. But if they wouldn't have done the reverse mortgage, she wouldn't be in the house today. She couldn't afford the mortgage payment, or she would just be getting by. And she lives a pretty good life. She lives in Las Vegas, plays bingo probably 7 days a week. She wouldn't be doing that without the reverse mortgage.
Would you consider starting the reverse mortgage as a last resort then?
I don't think so at all. I think it should be used as a retirement planning tool. I mean, some people do the reverse mortgage when they're in that position. They don't have a choice. That's their only option. But I think people need to look at it more as a planning tool, learn how it works, how it could be of value to them, when it would make sense for them to do. And a lot of times people are going to come to the realization that it makes sense to do it right now for something that might happen in the future. So they can just set themselves up, protection in a way. So yeah, I think it's a great alternative. And some of the alternatives that have been kicked around for years and years, I don't think they're necessarily the best alternative for a lot of people.
Mm-hmm. We often hear that reverse mortgages are a complex transaction. And my response is, what financial transaction is not complex?
They're no more complex than any other financial transaction that we typically deal with. Now, I have a PhD in finance, and I worked in the reverse mortgage industry, so I'm pretty familiar with all the documents, everything that goes along with a mortgage. I just bought a new home a couple years ago, and I'm telling you, it was confusing looking at all the documents. If you look at the documents and all the paperwork you get with reverse mortgage, I think it spells it out pretty clearly exactly what the costs are, everything. Everything is disclosed. That's the biggest difference, I think. And it's not a simple transaction, but it's the only transaction I'm aware of where the borrowers have to go through counseling by an independent party ahead of time. Now, if you were 70 years old and you wanted to get a traditional mortgage, nobody requires you to get counseling.
Right.
I don't understand,
Yeah, so they can go get a conventional mortgage or forward mortgage or a home equity line of credit, HELOC, without the counseling and have to make payments, and that can cause problems if they can't make payments, especially if health issues come along, financial, if they even qualify is another issue. But
and you never read any negative articles about the 80-year-old person who refinanced their home on a 30-year mortgage, and it went south.
yeah, because she couldn't make the payments, and then it was foreclosed on the bank, and she lost her home. But the headlines have been in the past, reverse mortgage, borrowers lose or seniors lose their home because of the reverse mortgage. Well, maybe it was because they didn't pay their property taxes.
Well, that's what I truly believe. I don't believe anybody has ever lost their home because of a reverse mortgage. I don't think there's anything wrong with the reverse mortgage product. People lose their homes because they didn't pay their property taxes, or they didn't maintain their house, or they didn't have insurance.
Terms of the loan, of any loan.
Yeah, and if there are any issues with reverse mortgage transactions, it's not the product that's the problem. In any industry, any business, there's always going to be a couple of rotten apples in there who may be doing things the way they shouldn't be doing it. But it's not the product. And if you become educated on it, you'll be aware of how it works. You don't have to worry about, you'll know exactly how it works.
I did an analogy of a TV. So if the TV manufacturer is like the lender, and somebody buys it goes to wholesale to the store, and then the store you know, somebody goes in and buys it from the store, and that's like the loan officer. And then the person takes the TV home and it's stolen. Well, that's not the store's fault. That's not the salesperson's fault. That's not the manufacturer's fault. Same with a reverse mortgage.
Well, and the whole point of the counseling is to make sure that no senior is taken advantage of, because the counseling is done by an independent party. So it's hard to understand how things get twisted as much as they do.
And does that independent party present them with other options too? Is it?
They do present them with other options, but most importantly, they make sure that the borrower understands 100% how a reverse mortgage works.
Okay.
There's no doubt. I think they even
Yeah.
have to pass some sort of a quiz now at the end,
Well,
don't they?
they don't
Well,
really
not a
do a
quiz, but-
quiz. But we don't want to scare people that they have to do a quiz, but they do question.
They
and make
follow
sure-
up to
yeah,
make sure they
They
understand.
make sure that they're understanding it. And other options, and I always tell people, consider all options. You need to decide what is right for you, but the reverse mortgage needs to be one of those options that you are also considering. And a lot of times we hear the conventional mortgage or the HELOC, which we've kind of talked about. And with those, they have to qualify based on income, credit scores, ability to pay the risks, ability to pay the loan back. And also then what happens, they have to make the monthly mortgage payments. And still pay property taxes and insurance. Sometimes that's wrapped into the loan. But what happens if life happens
Right.
and they can't make those mortgage payments?
Well, in my mind, the best use of a reverse mortgage is as a supplement to your retirement income. Whether you use it right away or you put it in a line of credit, you use it when you need to use it. But if you went out and got a HELOC and you're making a monthly payment, how can you really use that to supplement your income? You just created more debt that requires a payment. You put yourself probably at more risk. Same if you refinance your house and just pull out cash. So those are alternatives, but it kind of depends on your situation whether those would make any sense at all. The other alternative I hear a lot is, we'll sell your house and downsize. Well, that's not exactly cheap either.
No.
And you have to live somewhere.
Yeah.
And the one that kind of gnaws at me the most is sell your house and rent. Well, we're living a lot longer than we anticipated. So if you sold your house and you had to rent for 20 years, who knows what rent is going to be 10 years from now? You have no control over that whatsoever.
No.
So I don't think that's the best alternative either.
And I did a blog article comparison of if you sell your home, and I took into consideration the cost and the living expenses of, and you go into renting, especially into senior housing units that can be $5,000-$6,000 a month or even $4,000 a month, compared to staying in the home with a reverse mortgage and taking again cost of maintaining the home in that. If you're selling and moving a $200,000 home, your funds would last just over 3 years. Staying in the home with a reverse mortgage and utilizing the line of credit, because of the growth rate on the line of credit, it's 9.8 years. A huge difference.
Really big.
Yeah.
One of the other alternatives I hear about quite often is, either borrow money from relatives, or what I see quite frequently, which really bothers me, is people who put their kids on title and maybe their kids pay part of their mortgage. They don't understand the risk involved in that. If, for example, if I had my son and his wife and I put them on my title and they get a divorce, well, now I'm in trouble.
Yeah, because the house is divided.
Exactly. Or if they, get in some sort of a lawsuit and somebody's going to come after their assets, well, now their asset is my house. So I think these are things people need to
Consider.
seriously think about. And it's a very, very big risk. And it's
Yeah.
unnecessary.
Yeah, and sometimes they suggest about get the reverse mortgage from the children because supposedly it's cheaper. Well, one, are children able to do that? But also, what about the dynamics of the family? One may be able to and the other can't, and then that adds.
Well, and the other thing we don't really think about, but with the aging population, and the need for planning, if you're, say, 75 years old and your children are 55, they're pretty close to retirement. They need to be worried about what they're going to be doing.
Right.
And it would be difficult for them to support the parents in terms of doing the reverse mortgage or lending them money. There's a few people who could obviously do that, but
Yeah.
it's probably not real widespread.
Well, or if life happens to them, we have the boomer who's taking care of their parents, but they get sick and or lose their jobs, they're not in a financial situation. And then the seniors at risk also of losing their home because, they're like you said, worrying, but they need to worry about their financial situation. Plus, they need to be planning for their own retirement and long-term
Exactly.
care. So,
To me, the reverse mortgage is just an incredible alternative. Again, whether people choose to do it or not, it's up to them, but they really should find out how it works to see if it makes sense for them.
and we did another show on the reverse mortgage, a half-hour show. We're doing a half-hour today. You can't get everything in a short amount of time. Explore, be willing to take the time. When I meet with my clients, I'm with them for a minimum of 2 hours almost always, and that's just an informational session. And we don't charge for that, but we want them to have the facts, get it. And I encourage people to work with somebody that's maybe local that's going to take that amount of time and explain it to you.
Yeah, you're absolutely right. And that meeting you had with 2 hours, that might have just been the first meeting.
Oh yes, definitely. That's and then the application is another 2 hours. Closing is generally an hour, but we talk to them on the phone. I do have a blog breaking down the amount of time that we spend in doing a reverse mortgage. There's a lot of time, but those people need to take that and ask the questions. One of the things I always say, do you go to the plumber if you're having health issues? No, you go to the doctor and you go to the specialist. So go to the reverse mortgage specialist, get the facts, and then you can decide what's right for you, just as if you go to the doctor with a health concern.
You're right. There's no obligation whatsoever to go talk to a reverse mortgage specialist and get the information. And that's what people need to do. Don't necessarily believe everything you hear, no matter who it comes from. Because
Right.
it could be a financial advisor that really doesn't understand them, or a CPA, or an attorney. Talk to everybody you can, but definitely talk to a reverse mortgage specialist.
Yeah.
Can I ask, how would you recommend people find a reverse mortgage specialist they can trust?
In the industry, we have a designation, certified reverse mortgage professional, and we go through extensive education and training and take a test, and the test is not easy. I've been in the business since 1999, and I took the test and I scored very highly, but it was a challenging test. So look for somebody that is a certified reverse mortgage professional that has that documentation. I do have on my website, reverse mortgage or rmsidac.com, a list of questions to ask if you're considering a reverse mortgage. Our association, the National Reverse Mortgage Lender Association, or NORMLA, it has information on there and list of members for that also.
Well, and the good news is, too, that there have been a lot of regulatory changes recently that have been for the best. So if you went to anybody who does reverse mortgages, there's not much they can do to change the deal. 95% of reverse mortgages are home equity conversion mortgage, which is an FHA. We call it a HECM. It's standard. Everything is going to be almost identical. Some of the things that got the industry a little bit of bad press had to do with things like removing one spouse from title, and there were issues with that. Well, we don't have to worry about that anymore because they changed that. So
they address a lot of the
Exactly.
issues that are out there and of concern, and
it's not the way it used to be years and years and years ago. Now, if you go way back to the 80s, that's when I actually first learned about reverse mortgages, when I was working on my dissertation. it was totally different. When you do a reverse mortgage, they were called, I think it was reverse, maybe annuity mortgages, but there was an appreciation factor in there where the bank or the lender would share in the appreciation of the house. So if you did a reverse mortgage and your home value doubled in value, they're going to get part of that equity.
But there was benefits to the homeowners.
Oh, absolutely.
Doing that, yeah.
But a lot of the negative press came from things from years ago, and
we have more protections. Okay, in
Absolutely.
conclusion, because we're out of time, get the facts about reverse mortgages, understand them, work with somebody who specializes in them, not just your regular mortgage broker that may think that they can do it. Make sure that's somebody that does specialize. And thank you again, Professor Johnson, for being with us and sharing your wealth of information and your passion, as well as my passion. Again, thank you to Deb Nygaard from Arthur's Residential Care for adding into the conversation and being my guest co-host. And again, I'm Beth Paterson with Savvy Senior Sources and Reverse Mortgages SIDAC, taking a moment to say thank you to our sponsors, GWG Life and Reverse Mortgages SIDAC. And don't forget to visit SavvySeniorSources.com for information on resources. Thanks for joining us today.
What is the secondary market for life insurance? The secondary market for life insurance is an emerging financial market that provides individuals options with their policies. These options allow policyholders to benefit from the value of their life insurance. Policies are sometimes a financial burden, especially for seniors, as premiums often increase over time. The secondary market offers financial alternatives that can help policyholders benefit from their life insurance now.
Hi, I'm Beth Paterson, a certified reverse mortgage professional with Reverse Mortgages SIDAC. Bob's wife passed away, meaning his Social Security income was cut in half. His financial advisor suggested he look into a reverse mortgage. With the reverse mortgage, he was able to take a dream vacation with his nephew, and oh, the stories that they can share. After Bob passed away, his niece shared the difference that it made to the whole family. Dorothy did the reverse mortgage in order to protect her other retirement funds. With her line of credit, she was able to travel, buy a new car, and do home repairs. Years later, she's still benefiting from the reverse mortgage line of credit and not having to rely on her children. For more information on how you too can have security, independence, dignity, and control, contact us.